former is an interesting word here. You only left your post 2 weeks ago. So let's try and make a bit of news here. Have you had any conversations with President Buhari about returning to the finance ministry and becoming finance minister once again?
No, I have not, Guy. I have not done that. The president is currently in the process of putting together a new cabinet. I have not had a discussion with him about whether I'm coming back on the cabinet or not.
Would you like to go back?
Yes, I would like to go back to the cabinet.
Okay, in the same role that you...
In the same role.
Would you do things differently?
I was there only for 9 months. I started a number of initiatives that I would love to have an opportunity to push. The president has decided himself that he will continue the focus of the economic recovery and growth plan, that his key commitments to the population remains the same. We're just going to need to work faster and harder.
Ms. Ahmed, the economy is growing, according to Bloomberg data, 2.6% at an annual rate, but unemployment is above 23% and inflation is above 11%. What policy direction would the incoming cabinet take that would be different to what they've already been doing?
We had a very clear and very explicit plan. The economic recovery and growth plan helped us to come out of a recession. We've done a lot of the foundational work. A lot of building blocks have been put together. All we need to do is to push further, because the target of the ERGP was a 4-year plan, and we're supposed to move the economy out of recession, back on the path of growth, which we succeeded in doing. Today, we have attained up to 8 quarters of consistent, steady growth. The economy is stable. We have lowered the inflation rate from as high as 18% now to about 11.4%. The monetary authorities have been able to stabilize the currency, the Nigerian naira, for about 24 months now. The naira has been consistently stable at 305 naira to the US dollars. So the indices are all on the right track, and all we need to do is to push harder and push faster until we're able to reach the growth aspiration of 7% for the Nigerian economy.
Part of the problem is that revenue consistently disappoints, and more than half of what you take in goes to debt servicing. How would you change those metrics quickly so that the government finances might stabilize? So,
since I became Minister of Finance, my preoccupation has been on how to increase revenue. 2018 closed revenue at an average of 55%, and that's really very, very tough, because when you're underperforming at that level, it means you're stressed in terms of trying to manage the budget. So we have developed a strategic revenue growth initiative, which we've started implementing, and our target is to increase the revenue to 65% minimum up by the year 2019, so that in the next 3 years, we're able to attain 80–85% of our revenue targets.
So follow up on Ronnie's question, though, and she makes a good point about the amount of revenue that goes on debt. If you can't do that, is Nigeria heading for a debt crisis?
We don't have a debt crisis. Our debt is very much at a sustainable level.
Okay.
Today, the Nigerian debt, as of December 2018, not today, sorry, it's about 19.5%, and that is very low compared to all our peers. What we have is a revenue problem, and we have realized that that is a problem that we all have to collectively address. We also are working on reducing our costs so that when we spend on capital, the spending is more efficient and we save to apply the money to other sectors. What we have is a revenue problem, and that's what what we need to address.
One of the things that is always interesting about countries that produce a lot of crude is that the price of gasoline tends to be quite cheap. And that's definitely the case when it comes to Nigeria. So at the moment, it's capped at 40 a litre, isn't it?
Yes.
40 cents, effectively 40 cents, and I'm talking about dollars here, a litre. When I fill up my car here, I pay $3.56. Now, that's quite a big gap. You're subsidising the gasoline price in the country. Is that sustainable, A, kind of economically, and B, environmentally?
No, it is not sustainable. economically and environmentally. And we also have in our medium to long-term plan a plan to scale back on that. But we also have a population that is very, very poor, a large number of poor populace, and we cannot pull out the subsidy without providing alternatives. So the president has directed for us to look at how to provide buffers before that action can be taken.
You've also proposed a VAT, though. How do you reconcile both of those policies, that you would take away the subsidy for gas but add a value-added tax?
We are looking at adding value-added tax from 5% to 7.5%. 5% is perhaps one of the lowest VAT rates globally in the whole world. And the increase we're making is just 2.5%. And the increase is not going to be done overnight. We're going to do a lot of consultations because in our country we require a change to the law to be able to make that increase. So the consultation process will be driven and done within 2019, so that hopefully by the next budget year 2020 the new increase will take effect. We have just recently had to increase the minimum wage, and one of the agreements we had with the Labour was that there will be some marginal increase on VAT to enable us handle the incremental cost of increasing wages.
So what then will you do with the IMF? There is some concerns on the part of the IMF with Nigeria and policies, and you may in fact lose the ability to issue Eurobonds. What do you see in your future for Eurobonds?
We see a possibility of still doing another Eurobond roadshow. But the decision we took for 2019 was that we were going to concentrate on raising debt locally, which we have always done, but also on raising longer-term, lower-cost loans through concessionary windows like from the World Bank and other multilateral institutions.
Can I ask you a question that we're putting to a lot of our fantastic guests that have joined us here at Bloomberg for the Emerging Market and Frontiers Forum that we're holding and hosting here today? Has the Nigerian economy felt the effects of the trade war between China and the United States? And if so, how?
Well, Nigeria does feel the effect of this trade war because we can see also from the movement of our trade balance. For example, when the U.S. decided to adjust its interest rate, we saw FDIs moving out of Nigeria. We lost as much as 6 billion naira around the third quarter of 2018. So we know we're exposed. And we know that we have to build fiscal buffers so that such externalities will not have a major impact on our economy. Certainly, if this war continues, it's a major risk for us. We're watching what is happening, and we're continuing to build fiscal buffers.
Right now, the official exchange rate, Ms. Ahmed, is 306 naira per US dollar. Where do you see the US dollar going?
Where do I see the naira going?
Well, the US dollar, which would then have a run-on impact on the naira.
Well, if the US dollar depreciates, it will definitely affect the naira because a lot of our foreign currency transactions are dollar denominated. It will affect the naira.